The week ahead. Last week's discussion centered around support at the 5,900 level. If you notice, the low for the week was 58.76. It's not just that the low is 58.76. Part of your consideration should be that the market traded at that level 3 to 4 times. The more it trades there, the weaker it is, and the more stops will be built up there if the market should trade back down to that level. The close this week was just about at the 6,000 level. So we come into next week with resistance as at 6,000. Before we go any further, I want you to look at the daily bar chart graphic. What I'm showing on that is a number of days that have no real direction. The market goes up, it goes down, goes up, down. What you're looking at is a market that has been almost totally controlled by very short-term, heavily oriented day time frame traders. While the market is up and prices are up, when they're not supported, at least I can't see it, where they're not supported by good underlying buying, that suggests to me that if something should go wrong, the risk is excessive. Just because risk is excessive doesn't mean that we're going to have an issue, but you certainly want to be aware of it. The short-term traders are currently fixated on the all-time high. And as you remember, the all-time high was made during electronic or extended hours. We've talked many times that that is not a really secure high. We're much better off, much more secure if the high is made during daytime frame trading. I believe risk is excessive at this level. I think you also, if you look at the VIX is down under 16. I think it was like 15.25. And that's, near the lows for the past several weeks. So the VIX is not recognizing risk in the market. Now remember, the VIX is based on the purchase of puts, and there's not a lot of put buying, so the VIX is, is very low. But the complacency, when you have a VIX at 15, is another word of caution to me. So and the most important issue to deal with next week, of course, is going to be Wednesday when we get PCE. It's a very dangerous situation on Wednesday because you've got, the holiday, coming up on Thursday. You're going to have a thin market and significant information is possibly released on Wednesday, the day before Thanksgiving, and when the market can be very thin. So I would be extremely cautious next week. Your two references are 6,000 on the upside, 5,900 on the downside. And like I say, while price is clearly trying to go higher, I think the risk is excessive. Thank you. Have a great week.